Welcome back to Switzer on Sky News Money. Now, it's time to do a market tech check with our king of charts, Lance Lai. Let's see if those squiggly lines are pointing in the right direction for optimists, or do we have to accept that there might be some bad news out there? That's what you get with Lance Lai. Hey, Lance, how you going?
How are you, Peter?
Fantastic, mate. So we always start off with what you said last time. Let's have a quick look at that.
Great. Line is we've got more to go.
You've got more to go.
If you look on the chart there, I've got 1259.
You just see the sterling chart.
1259, which is 2.5% lower from here. 1.2128, another 6.5, and guess what? I've even got an outlook for 1.18.
Oh dear. So if you're travelling to the UK in the next week or so, don't rush out and buy the pounds, is what Lance is saying.
I said that we had lower levels that was projected in the charts, 1.259, 1.21, and even 1.18.
Okay, so the first one was my colleague Paul Rickard, and then the next one was me, and both times you focused on the pound and you predicted a doomsday scenario, and it basically has happened, Lance, right?
It has, Peter.
Yeah.
Yes.
So did you make a lot of money out of it, or did you refuse to even follow your own great advice?
Oh, no. There's a little bit.
Okay, a little bit. So what's the significance, do you think, of that? Apart from the fact that you picked it right, that this is a currency move against the Brits after Brexit, is there anything else we can read into it, do you think?
Oh, obviously, everyone is looking at this scenario, which was thought of as being unthinkable or unlikely, rather, and they're sort of reflecting that on the US elections as well.
Yeah, Brexit and Donald Trump have been compared.
That's right, and we're seeing that compared quite a lot. I suppose the pound is a warning as to where, I suppose, if Trump wins, perhaps the adjustment process would be a much weaker US dollar as a result.
But probably not as significant in terms of what Brexit meant to the UK as compared to what Trump might mean for US economic growth.
Well, you know what, Peter?
It's a guess.
Yeah, it's a good question.
It's a guess.
It's a good question. I think certainly if you said before Brexit, would the pound go to $1.14.145? That is quite unthinkable, and yet that was where it hit as a low.
Okay. Let's go to the charts you've pulled out now and see what you're seeing in that. So the first chart?
Sure.
So what are we looking at? It's the Shanghai Composite. On a day when Chinese data came out, probably a little bit better than expected.
Interestingly enough, that should have been the third chart, but we'll go with this anyhow.
Okay, you're flexible, Lance. You've worked on Sky News Money before, so you can do it. So Shanghai, what are we seeing?
So on Shanghai, this chart is really only a little bit higher. It's only 18 points higher than when I showed it back in A. A point is where I was on the show at the end of April, and at the time I said, you know, we've got a situation which is steady as she goes. This was after, if you look on the left-hand side of the chart, there was significant volatility. Yeah. And what we had is a situation, I thought I'd bring it up, and I wanted to ease this into being the third chart as showing, well, following the big moves in Brexit, what are we seeing in the US? What are we seeing in Shanghai?
Sideways movement, I'm suspecting we're seeing.
And what we're seeing is that we've got the massive currency move with Brexit, but we've got steady as she goes everywhere else. Yeah. And in China, we're constantly being asked, ooh, is there manipulation of the GDP numbers? Is there too much debt happening in China? And what we're seeing, at least in this chart of the Shanghai index, we've got a steady as she goes situation. If you look back, the Shanghai market there for 36 months. In July, it was in a 29% range. It was a steady as she goes situation. Then it went boom, straight up, 127% in 8 months. It since came off quite strongly, and everyone's rattled. Is this the end? Is this the end? And it's going sideways, as I thought. It's going to remain in that range, Peter, between R1 and R2. It's a big berth because the market can move around a bit. But I think we're going to go back to a situation like we were back in July, in 2014, 2013, 2012, where the China market was quite steady. And that's what this chart is showing.
OK, good. Let's go to the next one. We're playing charts, Russian roulette here. We don't know which one's coming up next, Lance. Let's keep our... It's ASX we've got coming up.
Oh, OK. So the ASX, this was the next chart.
Yes.
And S marks where I was on the show last time.
Yeah.
That was back in September. I said at the time that where we were going to go was a steady up. And what had happened, in fact, was that in the months prior, where the line was cut, that big sweeping yellow line, I said it'd go up. We'd go up to about T3, and indeed we did. Yeah. What we've got now is a consolidation back to the 200-day moving average. It's gone back up, and indeed, between the last show, which was only a month ago, I said we'd go back up to T2 and then to T3. We basically went back to T2. We're having a little rest. I think that these elections in the US need to finalise themselves, and then I think we'll be OK.
Can you, for the sake of my viewers, what level is T3, Lance?
Sure. T3 is 5556, 5,556.
OK. And so I guess if the scenarios like Hillary wins, OPEC doesn't cause any problems, the US maybe does raise interest rates in the context of good earnings and a good economy, well, then it might break through that and go even a little bit higher, I guess.
I think that the market wants a status quo situation. If we get that with Hillary and the polls show she's double digits ahead, if we have that situation, I think that T3 is
vulnerable.
No, well, it's good.
No, we'll take it out. We'll take it out.
We'll go there and beyond, which is what you're looking at.
Yeah, OK. Next chart. This is Brexit now. They're going to hit us with Brexit. Or have we done Brexit to death already?
We haven't. Oh, OK, this is the Brexit chart. So we're back onto the first chart. This is good. Yeah. You can see here what we had was on the far left-hand side, this is the US dollar to British pound, or British pound to the US dollar. Yeah. In the lead up to the elections, in 19 months, we had a 20% fall near on. And this took us to around about February of this year. In the ensuing few months before, it went up a little bit and then it's tanked off with the surprise result. I came onto the show and shortly after the Brexit was actually announced, I said, look, you know, you could see it in the lead-in to the show. I had targets on 1.1822. They were significantly lower on both of the shows prior to the current one in July and then in September. We finally got there. You can see on the far right-hand side, we had a huge fall. The fall actually represents... I said that I was expecting a fall of 9.5%. At the target level of 1.1822. It did that actually on the 6th of October, which was just earlier this month. And in the print, because the fall was so big, it actually fell to 1.145, which was 12%. We're currently at $22.73. I think what we're going to do, Peter, is it's going to head back up to the 1.259. OK. Well, mate, we're out of time. OK. OK. But the big takeout for me is that if things go the way we hope, this market does have a potential, the stock market has a potential to head higher, and I guess the US dollar will probably go with it as well. All right, mate, we're out of time. I'm sorry to say that. So that's the show. Thanks for joining us, and we'll see you tomorrow night.